I would like now to introduce today's presenter. Prashray Kala is a partner and member of the global sourcing team. He assists clients on topics related to sourcing model decisions, service delivery location strategy, enabling talent models for digital initiatives, and evolution of global delivery models. Aranya Kalia is a practice director in Everest Group's global sourcing practice. As part of her role, she supports clients in areas related to cost benchmarking, location decisions, and peer benchmarking. Akshay Mathur is a vice president in Everest Group's global sourcing practice. He assists clients in the areas of GIC provider engagement models and advises providers on workforce strategy. Ravneet Kaur is a senior analyst with the global sourcing team and works closely with clients, assisting them on location assessments, workforce strategy, benchmarking exercises, and GIC-related assignments. And with that, I would like to turn things over to Prashray.
Thank you, Rafael. Hi, and welcome everyone to Everest Group's Market Vista webinar for Q3 2023. Now, as you know, Market Vista is Everest Group's flagship membership program, which covers key industry trends and drivers for the overall global services industry. So as a part of this webinar today, the first segment of our focus will be the overall health and performance of the global services industry. We would then deep dive into our focus topic for today, which is quite an interesting topic, one which we've not explored earlier as well, and something which we see as emerging of great interest to all of our clients. So the topic for focus of the webinar today would be how enterprises are leveraging third-party providers to maximize the value add they are driving from their own in-house delivery models, or GICs. Now, for a long period of time, whenever enterprises used to make a sourcing model decision, they used to think that third-party outsourcing and in-house delivery models are two ends of the spectrum. Of late, what we are seeing is that enterprises have started to realize the value of having providers also assist and support their own in-house delivery teams. Now, through the course of our webinar today, we will deep dive into topic, talk about where we see such kind of a provider engagement, and then we'll also talk about what are some key action items which enterprises and providers can focus on to maximize on this particular trend. What I'd also encourage through this webinar is, of course, we like to keep this interactive. We like to hear from you, whatever feedback, reactions, questions you have, we would love to answer them as well. So please share your feedback, reactions, and questions through the chat window. And we will try our best to address that in the webinar today itself, towards the last part of today's webinar. If not, we will definitely reach out to you with answers to your queries. Now, that being said, we'll now start with the first segment of the webinar, and I'll have my colleague Ravneet talk about how the overall global services industry has been shaping in the first half of this year.
Thank you so much, Prashray. If we do a quick analysis of the sentiments of various industry leaders, stakeholders, and have a look at the emerging trends, they clearly indicate that, while the industry will continue to grow, concerns relating to the macroeconomic uncertainty and fiscal tightening have shadowed the growth prospects of the global services industry in 2023. And when we say global service industry, we are referring to both third-party outsourcing providers as well as in-house centers from offshore and nearshore regions. Now, looking back, the years 2021 and 2022 were phenomenal for the industry. We witnessed strong double-digit growth across both headcount and revenue. Such high growth rates were something that we had not witnessed over the past decade or so. However, as we talk to multiple stakeholders in the industry and our clients, it seems that for 2023, the estimated growth is going to be much more subdued and somehow more in line with what the growth numbers were pre-pandemic. Now we understand there are multiple reasons that are contributing towards this moderate growth. Obviously, the first and foremost one is the macroeconomic slowdown, with various source as well as delivery geographies witnessing a recession or at the verge of one, or there are recessionary pressures. Second, the rising prices and fiscal tightening to combat the inflationary pressures. And while there have been measures by central banks across the globe, prices and inflationary pressures continue to be on the higher end for all geographies. And thirdly, there are some concerns on the geopolitical end as well. Now, what this has done is together they have resulted in a slowdown in consumer demand, as well as putting more and more margin pressures on both our enterprises and providers. Added to this, the overhiring in a way that we saw during the boom period of 2021 and 2022 is also putting pressures on the industry growth. A mix of these factors and many more have significantly lowered, the growth forecast for both revenue and headcount. And the expectations for full year 2023 is that both revenue and headcount will witness a growth in low single-digit numbers. As we move to the next slide, we see that the performance of providers for the first half of 2023 has been fairly moderate. We do see the revenue numbers witnessing a growth. However, this growth has been a little slower than previous years. And one of the key factors that has been haunting the industry, which is the growing attrition rates and a lot of headcount slowdowns, that has also started to decline, and attrition rates are more or less now closer to what is the usual industry normal. Unfortunately, this isn't exactly the complete picture. If we deep dive into the financial and non-financial parameters, there are some concerns that are cropping up about the future. The first and foremost, we see that operating margins have continued to remain stagnant or even declined over the last year. This basically indicates that while our revenues do continue to grow, the cost pressure and margin pressures are playing into the operating margins. In fact, most of the providers that we've been talking to and reading into the Q2 results, they are indicating at low growth or no growth or even a decline in their numbers for 2023. Now, what we see is that as growth expectations fall, we do see that new center setups and expansions by providers has fallen much below the numbers for last year. In comparison to the 97 new center setups in the first half of last year and about 110 in the second half of last year, there have only been around 86 center setups or expansion during the first half of this year. And while we understand much of this is led by a low propensity for capital expenditure in such uncertain environments, this is also a result of the optimization of delivery portfolio, which had rapidly expanded in the last 2 years. So some bit of optimization is very much possible, though the concerns around capital expenditure, the curtailing of expenses continues to be there. If we move to the flip side towards the GICs or the global in-house centers, we see that they have been witnessing a very strong growth in center setups and expansions. In fact, the numbers for the first half of the year point toward a record growth. 255 centers were set up within the first half of this year, which is much, much higher than the same period over the last 2 years. At an industry level also, if we look at the right side of the slide, we see that all major industry verticals did witness a growth in center setups during the first half of this year, with the manufacturing and healthcare leading the pack. In fact, healthcare is actually one sector where we have been seeing a heavy investment in the GIC model, with new technological advancements like artificial intelligence. We are seeing enterprises leveraging the GIC model for, with new technical advancements for drug discovery and development of disease screening technology. So on an overall, we do see that GIC's model has been doing much better. And we do see a lot of center setups, a lot of focus on this side of the business.
Ravneet, it's quite interesting trend you're drawing. We talked about how new centers set up in offshore, nearshore geographies by providers is happening, but not as much as the past few years. But the number of GIC centers continues to increase, right? We are seeing more and more setups every year. So do you have further insights? Are these net new entrants to the GIC model? Were these enterprises already using some GICs, are expanding that portfolio now? Are these small scale, large scale GICs? Would be great if you could share your insights on this.
Sure. So if we move to the next slide, we see that, yes, the GIC model has been getting a lot of interest, and close to 70% of all setups that have happened during the last 2 years have been through the GIC model. And to answer your question, yes, much of this growth has actually come in from new entrants only. So more than 60% of center setups that happened in 2021, 2022, as well as the first half of 2023 has been driven through new entrants only. In fact, if we look at the headcount growth also, the headcount growth in GICs also has been witnessing a double-digit growth. And the way trends are, we expect it to continue in the coming years as well. Looking at a longer time period, to answer your question further, yes, we do see an evolution in kind of industry verticals, the size of GICs, the kind of function supported that the GICs have delivered to evolve a lot. And more recently, technological advancements being a reason for the growth in your GIC setups. So over and all, if you look at the left-hand side of the slide, you will see that newer and newer logos are being added, newer and newer companies are taking up the GIC route and setting up centers to take advantage of this boom in the GIC model.
Great insights, Ronit. And in fact, to touch upon this point as well, right? We are seeing an evolution of the GIC model itself now, which actually gives us a great segue into the next segment for our webinar today. And I'll ask my colleague Akshay this question right now. I know the topic for today is how providers are now partnering up with GICs, but before that, it's important to understand how GICs themselves are evolving. So yeah, if you could begin by that, and then also talk about where we are seeing this provider GIC collaboration, I think that would be a fantastic insight.
Sure, Prashant, thank you. So as we discussed, right, enterprises have invested in GICs. Going forward as well, we expect that enterprises will continue to invest in GICs. Where will they invest in? Whether it is setting up newer centers, whether it is expanding their existing setups, right? Whether it is serving more functions to the same centers, right? At the same time, as Avneet mentioned, right, they're also looking to evolve. They're also looking to drive more value for the enterprise. What that means is they want to accelerate enterprise-wide transformation engagement from GICs. We have all seen how GICs supported during the COVID crisis in the past couple of years, how they help enterprise drive a lot of work from home, hybrid initiatives. At the same time, as we discussed, due to these cost margin pressures, enterprises are also looking at GICs to help optimize their spend. What that means is delivering same functions more efficiently, having more delivery, which can, in the global sourcing model, more efficiently as well. So these are the major objectives for enterprises as they go ahead. Which brings us back to the same question which, Prashna, you mentioned in the beginning of the conversation, right? It is no longer today about, choosing provider at the cost of GIC or choosing GIC at the cost of provider, which used to be the notion a couple of years ago. Today, what enterprises want is, of course, they want delivery done at a lower cost, which adds a lot of value. And they are looking at both these entities to partner with each other to grow this entire GIC. So net-net, it is no longer about growing GIC at the cost of providers, but it is more about how can enterprises leverage providers more strategically as they grow or evolve or optimize their GIC. Which brings us to the first poll question of our today's webinar. Now, this poll question is only for enterprises. You will see 5 options. The question is, as an enterprise, have you started engaging more with providers, more strategically, as far as the GIC centers are concerned? The 5 options are, yes, you're already doing it. B, you're engaging with them, but in a limited manner. You've not started doing it, but you plan to do it in the future. You don't do it right now, and you do not intend to do it in the future, and then you're not sure. So these are 5 options. Please cast your vote. What we believe from the emerging results as well, and what we believe is that these things have changed significantly in the last few years. So we expect that more and more enterprises today, either they're already engaging with providers in some capacity, or they're already doing large strategic engagements as far as their GICs are concerned with providers.
Now, Akshay, I think we are seeing a very democratic choice of votes throughout the options. I think we can stop the poll now and see what the results are.
So yeah, as we discussed, if you can see the results, roughly 30% of participants have said that we are already engaging with GICs, but in a limited manner right now. Almost 1/4 of the participants are not engaging yet, but they're actually actively considering to leverage providers to drive growth to their GICs. And then there are some 10% odd enterprise participants who are actually strategically engaging with GICs as of now. And then there are, of course, because this is a fairly new space, as we established in the beginning as well, there are some enterprises, roughly 30%, who are yet to decide which side they want to lean on. Now let's talk about the areas in which providers can work with enterprises. Based on our experience, we have seen providers engaging with enterprises across the life cycle of the GIC. So for example, an enterprise can take help from a provider when they're setting up the GIC. So whether it's a BOT construct, JV construct, virtual construct, and we'll discuss more about this in the next few slides. They can also take help from providers as they want to drive transformation in their existing GICs. So for example, as an enterprise, you want to drive digital transformation, you can take support from a provider. You want to create new COEs, you can take support from providers. At the same time, something which has emerged pretty resoundingly in the last couple of years, enterprises now are becoming more open to take provider support in case they are facing or they are having distressed GICs. For example, they have GICs where they have not been able to grow a lot. Let's say they are facing intense cost pressures, or they've not been able to scale because of the talent crisis. Enterprises today are much more open to take support from providers to, so that their GIC can grow. That provides a good segue to understand how an enterprise can actually support, how a provider can actually support an enterprise as far as setups are concerned. Aranav, what are you seeing from a market perspective as you think about GIC setups and the relationship with providers?
Absolutely, Akshay. Akshay, so as we had also seen in earlier slides, right, we are seeing a lot of enterprises entering into the space. And a lot of them are new entrants, which essentially means that they may not have the expertise or the skill sets in all the areas that are required to establish a GIC. And this is exactly the place where a provider is able to enter, and they have the ability to assist them with their needs. If we go to the next slide,
we'll also see that this is also a very advantageous aspect for the enterprises, right? Engaging with a partner allows them to increase their speed to market. It allows them to establish a GIC in a more easy way to handle the operations more effectively. It allows them to also reduce the upfront investment that they have to make. Because we have to remember, establishing a GIC is not an easy thing to do. You have to identify the right real estate. You need to hire right resources. You need to upskill them. You need to have your IT infrastructure, applications in place, and you need to adhere to the regulations of the land. And a lot of these enterprises are enterprises that are maybe operating more onshore. However, their GICs are being opened in more nearshore or offshore regions like, say, India, and they may not have the feet on the ground to understand the regional nuances of operating a GIC in that place. And hence, having a partner that has an understanding about the regional nuances is extremely, extremely important, right? So an extremely important thing for the enterprise as well. If we now move on to the next slide, we see that based on the level of investment that an enterprise wishes to make upfront, they can go for three ways in which they can engage, right? They have three options. They can either go with a JV, where they co-invest in terms of the operations and handling the GIC. B, they can go with assisted, which essentially means that they retain the management of the GIC, but the day-to-day operations are with the external agent. Or lastly, they can go with a BOT, where essentially the provider is doing the initial investment in establishing a GIC, operating it. However, the enterprise has the option to have that entity moved back under their ownership if they wish to, right? So they have a lot of options available to essentially explore. If we now move to the next slide, we see what we're actually observing in the industry. As you can see, the split of the provider-assisted GIC has been increasing in the last few years. And if you break this down a bit more, you will see that, interestingly, it's a surge in the BOT deals that is, it's increasing. We're seeing a resurgence in this space. The key reason behind this essentially is that a lot of the enterprises, as we'd highlighted earlier, they understand that GICs are extremely important and an area that they should invest in. However, the macroeconomic environment right now and in the last few years as well has restricted them in their ability to do this on their own. And hence, they have been going through the BOT route to invest in this space. If you move to the next slide, we just spoke about establishing new GICs, but how about the existing ones where the enterprises are, say, interested in upgrading them? They want more value add from them. I would now like to invite Ravneet to just help us understand how this space has evolved.
Thanks, Aranya. And you're absolutely right. GIC transformation is one area that is seeing a lot of interest from enterprises. So from small scale operating model transformations to complete overhauls involving process and digital transformations are being considered or even taken at the GIC level. And truly the current macroeconomic turbulence, especially when it comes to the need to counter margin pressures and the need for optimization, is making it very essential that GICs step up and showcase their strategic capabilities. Providing just cost savings or talent arbitrage opportunities is now considered a regular support. And GICs today need to go above and beyond this to provide differentiated value add. And we understand this is the space where GICs are looking to leverage providers to build capabilities to be able to deliver this much broader and more strategic mandate. So areas like decision making, strategy building, global ownership, third-party vendor management, which were previously not a priority for GICs, is now taking center stage. We did a survey sometime earlier this year to understand what are the areas that enterprises and GICs are looking into to leverage providers. And we understand there were 4 key areas that are garnering a lot of interest from GICs, and they're looking for provider support from this. The first and foremost is obviously on talent management. This, given the growing need to upskill and reskill talent with evolving technologies and limited talent availability for such skill, is a priority. Second, with newer technologies like generative AI coming in, the need for a wider technical know-how and expertise is gaining a lot of interest. Third, prioritization across different initiatives to maximize ROIs is another. And lastly, accelerating speed of execution and enhancing project management capabilities is also something where GICs are looking towards providers for support. Now, again, there are multiple benefits to this that GICs stand to gain from leveraging providers for such transformation support. When it comes to transformation support providers, they typically have a lot of specialized skills and expertise in such areas, such as digital transformation, technology adoption, process optimization, and thus they can play a very vital role in the GIC's transformation journey. Just to list out a few of these, the first and foremost is obviously the cost savings or the cost reduction. While I understand, there is an upfront cost when it comes to bringing in a third-party vendor, but the long-term benefits can outweigh the expenses. Providers can help optimize processes, they can reduce your operational cost and also improve your resource allocation, leading to a much wider cost savings in the long run. Not only this, providers can provide increased scalability, flexibility, which allow GICs to customize the transformation in line with the needs of the wider enterprise. Providers also come in with much skilled resources, much more advanced technologies, which can be leveraged by GICs. And lastly, risk mitigation is another benefit that GICs gain from leveraging providers. Given the wide expertise and experience in delivering transformation projects for a variety of different clients, providers can help GICs identify potential risks and also help develop strategies to mitigate such risks. This also does play a role in de-risking the concentration concerns at the GIC level. Now, what we understand is that together, these benefits will allow GICs to direct their internal resources on more efficient, effective, improved service quality, as well as give them space and time to focus their concentration on their core competencies and strategic initiatives. Now we understand, Aranya talked about how GICs can be supported in the setup phase. We talked about how GICs can be supported in the transformation phase. We are now reading a lot about what is happening to some distressed GICs being acquired by providers. Akshay, can you help us understand what is happening in this space? What is it with the GIC carve-outs that you mentioned earlier?
Sure, Afneet. So one space which has piqued interest of both enterprise and providers in the past 12 months has been this entire notion of enterprises taking providers' help if they have distressed GICs. It is again driven a lot by the current macro. That being said, there are multiple reasons why an enterprise would want to, take help from a provider as far as uh, distressed GIC is concerned. For example, it helps enterprises in driving financial turnaround. So either monetizing assets, reducing stress on the balance sheet. That is one big advantage if a enterprise is able to take support from a provider as far as distressed GICs are concerned. The other thing which often is a challenge why you have a distressed GIC is because the service quality is not up to the mark. There are issues with regards to, let's say, skills of the people, the talent which is employed there, or even the technology expertise. So a provider, given the scale they have, given the capabilities they have, in-house tools they have, the automation processes, they can help improve the service quality for that GIC once they take it over. And the last one, of course, is from an enterprise point of view as well. Often, in some cases, it helps them reduce their risk or the concentration risk, plus reduces the management bandwidth which is required to run some of these GICs. Now, case in point being, in the past 12 months, the number of GIC carve-outs or GIC acquisitions, whether it is full acquisition or partial acquisition of the GIC, which we have seen, has jumped 4 to 5 times what we typically see in any given year. Here we are considering only GIC carve-outs which were mid to large in size. And on the right, you can see multiple examples where some of the leading providers have taken over GICs of some of these enterprises, which were actually facing multiple issues, let's say around cost, talent, or others. So net, this is one area which has seen a lot of traction in the 12 months, again, partially driven by the current macro. That being said, there is opportunity for enterprises to partner with providers as they look towards growing some of their GICs which are under stress or under duress. Prashna, we have all in the past 30 odd minutes, we've spoken about different models. We've spoken about what are the enterprise motivations to engage with providers. Can you talk about what providers are doing as they approach the space?
Sure. In fact, Aranya would be joining this section of the presentation with me. And it's interesting, right? We've talked about enterprises, GICs, what's changing, their preferences. Half part of the equation also is providers, what providers are doing differently. So maybe we'll first begin with a quick poll. And this is for providers only. The question is, in the last few months, let's say last couple of years, have you initiated or intend to invest strategically in developing capabilities, especially focused on GICs? Now, we are not talking about traditional, typical outsourcing, which seeks to get business from the enterprise for the work currently being done in higher cost locations. But this is about supporting the current global delivery in-house models of these enterprises, right? What we call GICs. Again, the options which you have is, yes, you've already undertaken, not yet, but plan to, and no, you don't plan to invest in this area, or cannot say. Now, while we wait for the results to come up, I think here we are seeing more aggressive adoption of this market practice, right, Aranya? I think compared to the results where we saw in enterprises, the way these early results shape to be, I think most of the providers have undertaken measures or starting to think about taking measures to directly target GICs.
Absolutely, you're extremely right, and it's very interesting to see that we don't have anyone, highlighting that they do not plan to invest in this space. So we have either they've already initiated or they intend to. A few things.
Yeah, in fact, I think we can stop the poll now. I think we've got most of the responses which we need, and just sharing the results for the audience as well. As you clearly see, about, I would say, 85 odd percentage providers have either already undertaken strategic initiatives or they are underway for these providers, right? So 85% of the providers are already seeing this as a growing segment targeting that. Very small percentage cannot say, but none which are saying that this is not a growing area of need. So definitely, I think this is also coming on the back of, we seeing a lot of deals, RFPs focus on the GIC themselves, and providers seeing a lot of deal activity in this space. Aranya, I know these are the poll results which we're getting today, but I know you track this industry in terms of provider strategy as well. How have you been seeing the different kind of measures being taken by providers?
Yeah, absolutely. And if we move to the next slide, yeah, we'll speak about that. Our observation is in line with the results which we just highlighted. More and more industry players are moving from a reactive approach to a more programmatic approach towards this space. They are hiring resources. They're making a team that is only working on this, on this area. They're hiring, senior resources from different GICs in order to, understand how exactly they can help them. They also have increased their sales forces that are operating in this space with the agenda of increasing their essentially their clients in this space, right? So essentially, and we expect this to increase ahead as well, right? So overall, yes, we also see a lot of players moving from the reactive approach to a more structured approach. If we move to the next slide, we've just spoken about that both ends are interested and also aware that there is a lot that they can learn from each other. And hence, in the last few years, we've seen a lot of announcements being made where a lot of large players and enterprises have engaged with each other in this space. If we move to the next slide, we've spoken about how this helps enterprises, but it's also important to highlight that for the providers as well, this is a very important area to focus on because this can essentially help them with their large deals, because a lot of the engagements that involve the GIC aspect are either really large in scale, right? Or they go on for a while. So there's a lot that they can learn from this space and essentially help improve their sales as well, right? So extremely important for them to also invest in this space. If you move to the next slide, right? So we've spoken about both ends of the spectrum. I would now like to invite Akshay to just speak about what he would recommend each of them to do in order to make the most of these opportunities.
Sure, Anya, thank you. So as we've discussed in the last 30, 40 odd minutes, right? This market has changed a lot. Enterprises today are no longer concerned about growing one model, one sourcing model at the cost of another. And it is visible across the life cycle. We are seeing more and more engagements between a provider and enterprise, whether it is during the setup phase, whether it is during the transformation phase, or even in cases where you have a distressed GIC, right? So what does that mean if you're an enterprise? What that means is, A, you have to start viewing GICs as strategic partners. They are no longer only entities to drive talent and cost arbitrage, but rather you should see them as entities which can drive value to the overall broader enterprise. The second one is enterprises need to be more open to partner with providers, as there can be significant value addition which this partnership can bring to the overall network. What that means is providers can help you either increase the speed to market, reduce your cost of operations, reduce your risk. They can also help you, drive better service quality, given their experience of doing this in scale. So essentially, from an enterprise perspective, three broader things. Start viewing GICs as strategic entities. You should be more open to take support from providers across the life cycle. And the last one, of course, is leverage providers strategically. Again, multiple benefits we spoke about. At the end, what that means for provider as well, right? How we discussed how this market is now changing, how a large number of providers were not programmatic till a few years ago, but now they are, right? The first big provocation or the first big recommendation from our side for providers is that you need to understand and embrace that this is a large market opportunity, and we expect this to grow even further going ahead. The second one is that this market is very different than traditional outsourcing market. So you need to have a programmatic and structured approach. Now, what does that mean? As we discussed, it means either having a dedicated business group which focuses on approaching GICs. It might mean having a dedicated sales team or a GTM strategy, let's say, which focuses not only on GICs, but the parent enterprise as well. So you can drive large scale transformation, right? What it means is you need to have people with, let's say, KPIs, which include new net logo acquisition, right? The third one is the time where the traditional cost, talent, value proposition used to be a game changer has gone. Now that is table stakes. From an enterprise perspective, they are looking at providers who can partner and drive good value. For example, providers which can help enterprises in large scale transformation. They can help them in revamping their operating models. So you need to develop a distinctive value proposition based on the needs of that GIC as well as the enterprise. And at the end, what that also means is you'll need to start building, investing in capabilities which are specific to the GIC business. A lot of these deal types, right? For example, within setup, you have three prominent models apart from multiple others: BOT or virtual or JV. They require fundamentally different kind of solution. If you are in a deal, in a conversation with an enterprise around taking over a distressed captive, that's an entirely different ballgame. So from a provider perspective, going forward, you need to invest time and investment to actually develop capabilities which are aligned to GIC business models. So these are the recommendations from our side as far as enterprises and providers are concerned. Before we move on to the Q&A, as part of today's webinar, there's complimentary access to either of these, our most recent thought leadership reports. The first one, of course, is the Q3 update to the market vista, which will cover the emerging trends in a market with respect to, let's say, center setups, with respect to deal types and whatnot. The second report essentially tries to help you understand how you can, it helps you understand the latest developments in different locations, the key aspects of delivery strategy, such as scope, drivers, planning, stakeholders. So you can indicate your presence of whichever of the complementary access on the post-webinar survey as well. Now, this brings us to the Q&A section of the webinar.
Thank you, everyone. Very insightful, a lot of those points which you made. I think we're seeing a lot of changes in the market. And as you mentioned on one of your earlier slides as well, the number of provider-assisted GIC setups, so the number of carve-outs which we are seeing, we have not seen those numbers for a decade, right? So activity in this space is at a decade high. We know of many providers, who are getting into deals of 100 millions, possibly billions worth of portfolio in this space as well. We know of enterprises who are seeking to quickly ramp up their GICs. In many cases, have a transformation of the GIC, add capabilities to the GIC through this model. So this is a very live and active space, and we've received a lot of questions as well. Let me take some of the questions which more number of folks have asked, right? In fact, I think one of the questions which we are getting is, this entire trend which we see around getting provider support, how much of that is driven by cost considerations versus others? Aranya, I know you had talked about this. We're talking about provider support both in terms of setups as well as, let's say, carve-outs. How much is this driven by a cost play versus others?
This is an important area, right? It's an important thing, but it's not the only thing, because as I highlighted, there are a lot of other aspects. You're able to essentially inaugurate your center and start operations faster if you have a partner. You have access to regional experts who know about the lay of the land and exactly help you understand how you are expected to operate there. And in terms of investments also, like, it's not just about your expenses. You need the right resources who have the skill sets to be able to undertake each of the three things that we spoke about. So it is not only about expense, it's about a lot of other things.
Thank you, Aranya. Akshay, one of the questions which we are getting from multiple attendees for the webinar, I think Nilesh has asked that, Boris has asked that as well. Is there a common denominator which we are seeing on the kind of work which is being carved out? So is there a particular trend or a pattern which we can say in terms of functions, geographies, business segments, is where we are seeing more number of GIC carve-outs happening?
There is, thank you, Prashant. There is no particular trend. The biggest driver of GIC carve-outs has been the fact that there's a distressed asset because of, let's say, multiple reasons, because they were not able to scale up in the past couple of years, because their cost of delivery is pretty high, because the enterprise itself is facing issues. So the GIC can be situated in, let's say, India or a Philippines or a Poland. The GIC can be delivering technology business process. The original thesis was that the entire distress will hit more business process captives, GICs, compared to technology GICs. That being said, we have not seen any difference across, let's say, verticals, geos, right? So, and it is purely dependent on where the enterprise is or where the captive is in its journey.
Yeah, and I think we observe the same, especially as part of the many deals which we've been in the last few years. It varies as per the maturity and the service delivery of each organization. The areas where each organization is seeking to get support is different. So this has to be a customized approach for each of these enterprises. Now, what this means for enterprises is they have to evaluate, let's say if they're setting up a new GIC, are they comfortable with that location? Will they be able to meet the ramp up targets in the time frame they've envisaged? Are they willing to take that CapEx risk upfront? For providers who are thinking about this space, they'll have to approach each client in a new way, understand what are the pain points for each client. I know Akshay has talked about distressed GICs, but we've actually seen a lot of examples where GICs who've been performing well have also been carved out. Reasons were different, right? In one of the deals I recall, it was because the organization wanted to focus on a different BU. Yeah. So again, in that case, it was obvious that the services being delivered by the GIC, they wanted somebody else to handle. In another case, I remember that the organization was changing its strategy, having its GIC focused more on operations because it realized that for a tech space, it needed more a partnership with the provider. So even though the GIC was doing infrastructure and app dev support, and it was having low costs, it was meeting all its SLAs, KPIs, but still, because the organization took a strategic change to the way it was thinking about its sourcing portfolio, it chose to carve out that particular function. So as Akshay said, there is no one-size-fits-all approach to this, right? Okay. Now, we have an interesting question from a service provider as well. The question here is that I think Ravneet talked about how the number of GIC setups is increasing. And yes, while provider setups are happening, but the number of new delivery centers being set up by providers is decreasing, right? So does this mean that this entire trend is something which providers need to worry about as something hurting their core book of business? Ravneet, if you could answer that.
A very valid concern, Prashri, and this is something that we've been hearing from some of our provider clients as well. But let me just clearly spell it out that, with the way the industry is evolving, gone are the days when we would say leveraging a provider or leveraging a GIC were two ends of your sourcing decision spectrum, and one would grow at the cost of another. Today, what we see in the industry is that both models of delivering global services has been witnessing growth. Right now, we do see a lot of focus on the GIC side of it, but what we understand and what we've been talking about during this webinar as well, that this comes with a lot of opportunities for providers, be it at the setup side, transformation side, or even divestitures. Providers have a lot of opportunities as and well the GIC model gets stronger. So GICs have and GICs as well, have realized that there is a critical role that providers can play in strengthening their role, strengthening their mandate, and what providers need to do, which Akshay clearly brought out, is that they need to widen their service offerings, customize them, and bring up focus initiatives to harness these opportunities. So if I have to sum it up and say, the way the industry is evolving, it is not a win-lose situation, but a win-win situation for both GICs and providers when it comes to the evolution of the market and the evolution of GICs.
Thank you, Ravni. Very well put and summarized, I'd say. But you're absolutely right. I think we saw the number of GIC centers growing, but we also talked about how a lot of these centers are actually being established with the help of providers. So again, I think you shouldn't view GICs as competition, and this is for the provider audience here, but as an opportunity area to engage more. In fact, a lot of this is not about displacing the GIC, but working with the GIC. The occurrences of GIC displacement are very few. Most of the deals we are talking about are where there is partnership with the GIC to meet common business objectives for the overall enterprise. So we are seeing more integration of these two types of sourcing models. In that net, it's the enterprise which is seeking to get more value out of both of these types of service delivery models, right? So I think great points there. And I know many providers did not used to prefer, let's say, going into a BOT deal. They would typically prefer traditional outsourcing deals. But with clients asking for them, and if providers are not able to meet this and don't have solutions designed for it, it's just leaving money on the table, right? So I think Aranya had talked about that in the presentation earlier as well. Many providers are now taking this as a proactive area, establishing teams, solutioning teams, sales team, capability teams focus on this segment. Great. I think we have time for one last question. And this question is from Boris. Akshay, I'll pass this to you. We are talking about increasing collaboration between GICs and providers, right? Yet we are still seeing this tension. They're fighting for the same talent, both wanting to lead, same deliveries, same operations. Yes, we've talked about collaboration, but are we still seeing this conflict? How can an enterprise best resolve this conflict between its two delivery arms?
Thank you, Prashri. I think this is, again, very interesting question and quite pertinent as well. Yes, Boris is right, because you have centers located in similar situations, so you are fighting for the same set of talent. That being said, what is changing now, at least, is as we said, right, the notion of GIC versus provider is now changing. So, for example, enterprises are thinking about, outsourcing some piece of work which might require different things, while insourcing or keeping within their GICs things, let's say, which are non-core or core. For example, an enterprise can tomorrow say that I want to keep the digital part of the house within my GIC, while I want to outsource the traditional part. And we are seeing these kind of middle grounds being reached. Interestingly, we have also seen in the past multiple enterprises having design principles in which they are saying that if I have my GIC in a certain location, I'll not have a provider facility in the same location, because I don't want them to compete, let's say, with each other for the same talent. So for example, if you are present in Poland and the GIC is present in Warsaw, they might have a provider facility in Krakow, but not in Warsaw. Or they might have a provider facility in Budapest in Hungary and not in Warsaw. So again, there are multiple avenues which enterprises today are using, with whether it is diversification of location, whether it is diversification of functions, to avoid these potential conflicts, so that it is not that the same arms which are delivering to the enterprise are competing with each other, and so that they can reduce a lot of this conflict before it even begins.
Okay, but thanks so much, Akshay, Ravneet, Aranya. I know your insights were driven by a lot of data research as well as live conversation with enterprises, GIC, and providers. I think it came out really well. I found the insights to be very helpful. I'll just talk about a bit more, and if we could move to the next few pages, please. Just talking about how we are helping different clients on these areas. For enterprises, we help think through the decision when to involve a provider, what's a GIC play versus a third-party play. Of course, helping in location strategy, due diligence, and other sourcing model decisions. For providers on this space, it's about identifying and evaluating the GIC market opportunity. How do you create a mind share with clients? What kind of strategy and teams should you have? And of course, supporting during live deals as well. There's a lot more content which you'll find on our website for this. Some of it we've highlighted in the next few pages of this document. You'll all receive a copy of this document. We've got blogs and we've got reports as well. I'm just calling out a report. If you could move to the next page, please. We've recently published the first of its kind peak matrix report, which essentially compares providers on their capabilities, which are focused on the GIC segment only. This report is out there in the market. For enterprises, we're already hearing it's been a very good read, seeing how different providers' capabilities compare. We've also recently launched a great viewpoint, which talks in detail about the BOT model. There's a lot of complexities there. How do you structure, solution, contract? A lot of those questions are answered in this viewpoint. There's a lot more reports which you'll find on our research portal, a lot more reports which will be published soon. So stay tuned to our research pages for all of these amazing insights.